Today, we're talking to three really experienced loan officers who work with lots of real estate agents. We're going to talk about what agents need to know to help their buyers with lending. I'm Mike Anderson, and this is Captivate Agent. So today I'm with Dave Johnson, Emily McGill, and Christian Martinez. There are so many questions that our agents have about lending. Most of them just send, buyers to you, and that's an awesome thing to do, and you want them to do that. But sometimes those buyers have questions before they even get to you. So what do you think a real estate agent should know about mortgage lending to help their clients before they talk to a lender?
I think that so many times I'll start talking to agents and getting excited about all of the possibilities, and I can tell that I overwhelm them. And so then I can't even imagine how borrowers feel when it's getting relayed to them. But knowing minimum FICOs, knowing, that they're going to have a 10% down payment if their FICO is under 580, almost positively, unless it's a very unique circumstance, because they're going to be going FHA. 620 mid FICO is going to be conventional. Knowing that down payment assistance is available at a 620 FICO, knowing about grants. I mean, we could make this conversation a year long.
That's a lot of stuff that I think for a lot of our agents, they know what FICO means, but they're not going to be able to pull credit. So they probably don't know what the FICO score is of their buyer if they haven't already talked to a lender. So what kind of things should that agent know to be able to kind of get things moving before they send them to you to get those details? Some of it should be kind of basic, right? Because some of those things, like you were saying, might be a little complicated for most agents, but we're trying to help agents put themselves in a position to really get their buyers to get excited to buy, when a lot of times they sit and wait because they have financial questions, but they don't ask anybody about it.
Yeah, and I was gonna say, sorry, Emily.
No,
I was
ahead.
just gonna say that a lot of times, agents, when they talk to the clients firsthand, it's understanding how each situation is different based on those parameters that will eventually determine how much they can buy, areas, and so yeah, I think that just to add what Emily said, it's just knowing programs, income ratios, and expectations for buyers, so they kind of know ahead of time what they're going into as far as qualifying or not.
Well, and I do think a lot of consumers look on Credit Karma and they know what their FICO is, but then they also don't understand that that's a consumer score, which is different than the algorithm to determine a mortgage score. However, it is a good indication of kind of where they sit at. And so I think for an agent, a short and sweet question is, whereabout is your credit? And if they say, I think I'm the mid 600s, the agent knows that they are kind of in the game for potential down payment assistance, definitely minimum down, potential grants availability, things like that.
FICO and Credit Karma, those are really different, right? My son, he's 24, came to me with his Credit Karma score. It was 760, I think it was. It's like, dude, that's awesome. He has no credit. I think he might have has a bid on a credit card. He doesn't, we bought his car. So obviously that Credit Karma score is probably not going to be that accurate if that's all they go by, right?
Yeah. And I think this is really a great point to start, especially from agents to clients, is to identify if they're loan ready. And that's a loaded term. That's a loaded question. When you ask someone, are you loan ready? That entails everything that both Emily and Christian have mentioned. But part of that as well is identifying what loan program is going to be best. Are their FICOs in order? Is their debt to income in place? And most important, let's identify the best way to go. Sometimes from a lending perspective, we might find that someone isn't loan ready. And so that's another component of, you don't want to waste your agent's time. You want them out showing homes to people that they know they can buy. Now, that individual who is not loan ready, for example, well, that's our job to go ahead and help them, work with them, get them to the point where they are loan ready. If that includes paying off debts to lower that debt to income ratio, if that includes getting credit scores up, if it includes looking for gift funds or looking at different grants, looking at different options because down payment is an issue, that's all part of helping someone be loan ready. So ask them, are you loan ready? And if most people say, I have no idea what that means, that's a great starting point to have this, honest and upfront conversation.
Well, to give you a little background on how this kind of all came about is, I'm an agent. Agents that work with buyers a lot of times are working with them, at least indirectly, for months. Not as much about showing homes, but really talking to people about wanting to buy, wanting to move up, downsize, whatever it is. And the biggest dilemma that most buyers have is, I don't think I can. I don't know if I can afford it, or it's not worth it, or interest rates are too high, or they have all these kind of ideas about the lending side of it, the financial component of it, but they don't really have any answers to it. And they look online, they talk to an agent who doesn't know. They think of the lender as the person that they apply with, not the person that they consult with. So I guess what I was thinking is, how do we position a lender and an agent in that role as a partnership in consulting their clients, getting them not just ready to buy, but also helping them overcome some misunderstandings? Because, knowing loan programs, knowing all the ins and outs of things like that you've been mentioning, most agents, I don't know, they're going to want to send them to you to kind of go through that. But I could imagine that if a buyer is like, I don't think I have enough to put down, or the interest rates are high, all those kind of things, is there something that an agent can say to kind of get things moving and say, you know what, why don't we meet with this, my lender, but maybe even not call you the lender, in the sense, I've got a guy or gal that I know that can help answer some questions that most people don't understand about loans and what you're able to do. I mean, there's lots of no down options. Is it worth it to do that? Can you kind of project ahead and know that not putting, as much down is still financially a good decision to make? Because most people think, of course, if you don't put much down, you're going to pay a much higher interest rate, or you're going to be in a worse position if the market turns, things like that. So I guess my thought with this question was really about, how can an agent work with a buyer that is contemplating a purchase and just keeps pushing it out, or just doesn't fully understand what it is that they can or can't do, in order to feel like, oh, I really should be sitting down and talking to a lender, not to apply, but really to figure out what's available?
I think that one of the biggest questions is, what is holding them back? That's a lot of times what we ask as the loan expert. Why are you not wanting to pull the trigger right now? Oftentimes our response is, well, if it's rate and payment, because that's a lot of what the hesitation has been for the last 2 years, then we start talking about temporary buy down. And that's really important for agents to truly understand the facets of it, because it either has to be paid for by the builder, the seller, or the lender. The way that it works is, if your interest rate is 6.25% and you're doing a 1.0 buy down, then the first year your rate is 5.25%. If your rate is 6.25% and you're doing a 2.1 buy down, then your rate will start at 4.25 at the inception, or at the closing and beginning of the loan. And then at the 1 year anniversary, it goes up to 5.25%. And then the next year it goes up to 6.25%. And then the 3-2-1 works the same. 6.25% starts at 3.25%. 1 year anniversary, 4.25%. And that's something where it can drive the payment down so much that it can pull people from not being willing to move forward to pulling the trigger. And the challenge for the agent is helping the buyer understand it and then getting the seller to pay for it.
So I really like the direction you're going. I still kind of feel like most agents, when they hear all those numbers and, kind of the fast talk of a lender, it kind of moves them away from that idea that, oh, if I don't think I can buy, I'm not going to bother because I'm not ready to apply. So I kind of, if you know what I mean. So I kind of like this idea that, if they're just trying to get their down payment low enough to afford it, and their monthly payment low enough to afford it. I love what you said about these buy downs. And is there something that an agent could say to that buyer to say, hey, you need to talk to this lender, because there are many ways, and like you said, loan programs, buy down options, things like that, that they can explain to you to get you where you need to be. And you may find that right now could be a good time for you to buy instead of waiting for interest rates to go down, because there are other opportunities that higher interest rates provide, meaning sellers are more willing to do these concessions, things like that. So what kind of things would you tell an agent to be able to kind of communicate, or to say to a buyer when they're not there meeting with you yet, that can really dummy down this idea that, oh, my lender can really consult you and help you understand that there's a lot more considerations than just thinking about interest rate?
I was gonna say, yeah, you hit that on the right answer there in a way, Mike. It's I think it's us as lenders educating agents, right? I think that yes, we're gonna educate the buyer once we get the phone number, right, and we tell them where they're at. But at the same time, if you're questioning how we can help agents be more active or proactive on that end of it, it's going to be they need to know in a way, certain the education to let them know where their clients will stand when they talk to them. For me, one way of doing it is I have a spreadsheet where I give agents to get an idea of what they qualify based on the income, right? And so I think it's educating them in a way where they understand to tell the clients, hey, talk to the lender first. That's going to be your first step, regardless of you wanting to buy right now or not right now, in 6 months, in 8 months. You have to prepare yourself to be able to know your options and get prepared. Like not Mike, Dave said, is make a plan to be able to do it. And I think that if we as lenders and agents are on the same page, we can really drive that client to their goal, which is buy their house and eventually do it the right way with the right program.
Yeah, and another component of that there, Mike, is really setting the correct expectation. There is nothing worse, I think, for an agent or a loan officer to have an individual that's sold on the concept of buying or purchasing their dream home or refinancing, whatever it might look like, only to get halfway through and find that the entire transaction collapses. That stinks. That's not good. So part of that from an agent in the very first really conversation is setting the correct expectations of what to expect throughout the process. And part of that is identifying, are you loan ready? What do you qualify for? What loan program is going to be the best? That's why you need to consult with a loan officer or this financial expert to help you through that process, because there's lots of terminology, big words that they're going to throw at you. But I want to make sure that I set the correct expectation. Another perfect example of that is a lot of times late at night, 10 o'clock, you're on the phone, you're scrolling through your phone, and your wife is on Zillow. She finds a home that's, let's say it's, $700,000. It's a dream home, right? She then turns to you and says, this is the home I want. Let's go. Let's get this done. Only to find out that the next day when you get excited, you don't qualify.
Right.
And so that's part of setting the expectations. So then your client or whoever it might be is looking in the correct price range. Another issue there is conforming loan limits. Maybe someone only qualifies for an FHA loan. Okay, well, they can't go above, let's say 500, 600, whatever the county or the FHA county loan limit is. So setting the correct expectation out of the gate, making sure that they're loan ready, helping them understand some of the terminology that you're going to be looking at, really sets a tone for the rest of the transaction to go as smooth as possible. And I think what it also does is it will go ahead and start a good conversation. If they don't understand something, they will ask, and it opens that rapport. And that's another key component of setting a correct expectation and having a good transaction, is having open lines of communication and making sure that things are being discussed very clearly and promptly.
Yeah. It does sound like, though, that expectation really needs to come from like one of you, because the agent's not going to be equipped with giving enough details on what they may or may not qualify for. But here's one thing, and I'll throw it out to you. Maybe you heard that we do this. So as we coach agents, we actually teach agents to consult with their clients, not just to see if they're ready to buy or sell right now. And I know we're all in that kind of mode of wanting to get the deal done. That's how we get paid. But we do know that there's so many people out there that are trying to figure it out, and they're looking to that agent, unfortunately, to get some answers when that's not necessarily the person that has those answers. So we've even told our agents, set up a consultation meeting with your lender, call them your numbers guy or gal, instead of just a loan officer, so they don't think it's just about applying for a loan when they may not feel like, I don't know if I can, but I certainly want to. And then go with them, go into that first meeting. I know that there's some sensitive information being shared, when you're taking an application, but a lot of times they've trusted that agent to kind of get them excited about something that they are trying to figure out if they can do. And we're thinking about, how do we kind of facilitate that? What do you think about having an agent, call you up and say, I've got John and Jane Smith here who are really anxious to buy that $700,000 home, but they have no clue if they're ready or anything. I don't want to just send them to you. I want to come too. I want to be a part of that conversation, and maybe I can help in some way. And, if I need to step out because you're talking about numbers or something, I'll do that. But we actually feel that agents should be a little bit better equipped to talk about lending at least the terms and understanding overall of what people are facing, because the buyer's going to that agent first. What do you think about an agent showing up at a meeting that you consult with the two of them about what that person can do in terms of buying?
I really like it when they do that, because then they also understand. And a lot of times, if you're a tenured loan officer, you can kind of flex your muscles. Like one recently, they'd been to 2 other lenders and they didn't qualify. And as I was talking through it, I was offering solutions, and we actually just ended up closing it a couple of weeks ago. And the agent was ecstatic, and they watched me problem solve through it. And I think that both Dave and Christian could attest to many examples of that. And so it's a great opportunity for us to build that trust with the buyer and with the agent at the same time. And it's also educational for the agent too. So, I mean, everybody's winning when you're doing that.
Yeah. So I was just looking for an agent that had on his database about 60 or 70 potential buyers. Like he had them all, he even showed them to me all laid out. He said, all of them are waiting. And I was like, waiting for what? Because I was asking about how his business was going. He's like, I've got all these people here. They're waiting. They're waiting for rates to go down. They're waiting for all sorts of things. Most of them had to do with finances. And as I asked him about a couple of them, some of them were like, well, does he know? Does he realize? That kind of stuff. So I guess that's what prompted this whole thing is, how do we first arm the agent with at least enough information to get that buyer to say, oh, you know what, maybe I don't know what I'm, where I'm at and where I need to be when it comes to buying. And then say, let's facilitate some sort of consultation meeting and come in together and talk through this. Because imagine now if you've got, in a database, like an average agent having 20, 30, 40 plus people just sitting there waiting. What if I could start getting that into a planning session instead of a waiting session?
To get loan ready.
Yeah,
Right.
exactly.
Yeah.
And that's the other component, is if that agent had another a little cell on that spreadsheet that literally said, this is what they need to do to be loan ready. Run hypothetical situations. If you're waiting on rate just because you don't feel comfortable, well, great. What does that potential watch list rate look like? Well, it may be their debt to income's at, just over the guidelines. So if I can wait and get rates down 1/4 of a point, then they could qualify for that dream home. So in addition to having that list, make sure that you collaborate with your lender and identify exactly what is needed to get that individual loan ready. And that's a big component. It's important for loan officers to collaborate with the real estate agent. This is part of setting that expectation as well. So then that way they know exactly what to expect. For example, if someone is going to be putting in an offer, but they own a home, an agent will usually ask, well, is that offer going to be contingent upon the sale of the home? Well, it's good to collaborate with the agent. So then that way they know right out of the gate. They don't have to read the fine print in a pre-qualification letter or an email. They'll know right out of the gate. So collaborate, set that expectation. If someone's not loan ready today, cool, let's find out and identify exactly why. So then we know when to reach out to them.
And I think that's the key, is the collaboration. And that's kind of what we're trying to figure out here. How can that agent then set that buyer up to want to do that? So one, they have to get over that idea that a loan officer, and as Emily said, at least an experienced loan officer, can be more than just a loan taker, right? They can manage a discussion and really get into the depth of what someone needs to do to get ready to buy, and then the second is that it has to be a collaboration, whether it's a Zoom meeting, like what we're doing here, or if it's an in-person meeting. Why not facilitate that instead of just letting Joe, sit at home wondering if he can ever buy and having his own, ideas of what that means, to say, hey, Joe, let's set up a meeting. If you don't want to come in, we can do a Zoom meeting. I've got my lending person that understands what it takes to buy. Let's start talking. Let's go through and create a plan. You want to buy in 6 months because you're not ready now? Great, we can do that. You may find out you're ready now, but at least you'll know. And I think that's kind of what we're trying to get at, is I've got these agents that we're coaching that have so many people in their database that are waiting. I mean, literally waiting for something. And 90% of the things they're waiting for had to do with finances.
Yeah, and one thing I was going to say that, going back to what Emily said at the beginning is, a lot of clients are waiting and waiting, but hey, guess what? We have these buy down programs available. Do they know? Do they understand how they work, right? And I think that going back again with the collaboration between an agent and a loan officer, it's they have to understand those so they can, educate their clients before they talk to us, right? And so that way, when they talk to us, they're open to listening to, these options available for them. And at the end of the day, Mike, I think that, we have all these options. Clients need to be aware and understand them better, so they can make that decision, right? Because at the end, we're not the ones making the payments for their houses. It's going to be them. But I think that if they are educated between a lender, like you mentioned before, and a realtor that understands these programs available for them, it will be a lot easier to, let them know, hey, you can buy now instead of waiting for those options to be on a multiple offer situation when you wait for rates, right? So
and as I said before, I really feel like that agent, if they're the first point of contact, that they can help facilitate this. So if the agent's armed with just enough information to get the buyer excited to meet with you, and then they go in together and they really look at it as a consultation instead of an application, because that idea of, I've got to be ready to apply. So I'm not going to talk to a loan officer until I'm ready to apply. Well, no, you should be talking to a loan officer to know what to do to get ready to apply. So my last question for all of you is about what you brought up before, this idea of pre-qualification versus, a pre-approval. So I'd love to hear your take on trying to make sure, because the agent's in charge of making sure that things go as smoothly as possible. And if we put offers on homes with buyers that are pre-qualified, but they haven't been fully vetted, we run into trouble a lot of times. So explain, just for an agent, what's the difference between a pre-qualification and a pre-approval, and how can you help manage the pre-approval process for those buyers instead of just doing the pre-qual?
I don't want the agent and myself and the buyer to all end up with egg on our face when I knew out of the gate that their income was kind of quirky. So I think that sometimes you do have to go past pre-qual directly to pre-approval. And I think that that's something that loan officers need to educate their agents on as well. And I love that you're bridging this gap, because it's really important that lenders stay in their lane and agents stay in their lane. But it's also important that we're, a driving force together. But I think that for an agent to understand that difference is big, like self-employed, funky income, stuff like that.
And just to add to that, Emily, there is a compliant component to it as well. You can't put a pre-approval letter on a pre-qualification letter. And Emily gave a great definition of what it is, but ultimately it's important to identify and distinguish between the two. And I really liked what Emily said as far as a more senior tenured loan officer. If you've got an individual who puts eyes, gets a copy of their pay stubs, their W-2s, or their tax returns, reviews their income, they know they got it right, that's great. They pull credit, they know the credit scores is great, that's great. They verify the assets for the down payment, that's perfect. Really, at that point, it's just a matter of running it through LP, DU, whatever it might be, so then that way you have your approval. At that point, that is a pre-qualification. That's about as good as it's going to get. That's great. Now, if you wanted to wait, and this is about part of the purchase process and setting the correct expectation, if you've got a buyer who's not looking to move for, let's say, 2-3 more months, well, great. That's an opportunity to have that open dialogue about, look, we got you pre-qualified, but let's take it one step further. Now that we already have the documents, we already have your credit, let's submit it to an underwriter for an actual pre-approval. Now, what that also arms the agent with is when the agent goes to put in an offer, they know firsthand, we've reviewed everything. At that point, it really is contingent upon a fully executed purchase agreement. So now that becomes much better. So if anything, when you start talking about the two different, make sure that as a real estate agent, if you see a pre-qualification, I don't think it's a bad thing, but just be sure to ask a follow-up question. Did you get the income? Did you verify the credit?
The idea of DU and underwriting and all that, although agents may have heard of underwriting, but DU, they probably haven't, many of them. But I love how you said to verify information. What can an agent and a lender do together to help a buyer understand being approved for a loan, what that means, or qualified, a way that's going to position them best when that goes, that loan goes under contract?
Again,
I'll
just say really quick. I think that obviously Emily and Dave already talked about this, but I think it's the agent has to tell their clients, like, please provide all the documentation they need so we can actually do that review, right? A lot of the times on my end, I tend to not give any pre-qual letters before doing a verification of employment, because on a lot of times, there's issues with income, and we have to confirm the income. That part of it is the main, I guess, per se, condition that we need to confirm, the qualification amount. And so I think that, helping agents to tell their clients, please provide everything they ask you so we can be ready. And like Dave said, loan ready. It's going to be providing all the documentation up front so we can be assured and we can have that assurance that that loan is going to go through with no issues.
And part of that as well is making sure that you very eloquently, very thoroughly explain the purchase process. I mean, purchase process. It's just that. It's a process. It takes time. It takes energy. It's not a one-stop, show up, 30-minute conversation, everything's good, you're done. That's not how it works. One thing that we find in the lending community is a lot of times you do loans that look so just black and white, so easy, but sometimes skeletons appear. Sometimes there's skeletons in the closet. There's things that you cannot see.
Right.
Until you get further down in the process. And when that happens, it's important to make sure that you already had that previous open dialogue about key terms like debt to income, credit, loan guidelines. So then it becomes more of a collaboration and you work through it. And as long as we make sure that people understand that there is a process, part of the process is up front of getting pre-qualified, then getting under contract, then submitting documents to an underwriter. This is all part of the process. And as long as they understand it and they engage in it, meaning they voluntarily reach out via email, text, or phone to a loan officer and ask all the little questions that they're thinking of. If they can ask as many questions as possible up front, even before pre-qualification, that purchase process inherently becomes so much smoother. Because odds are, if they feel comfortable and they're asking some of those questions, some of those skeletons that are in the closet might start to present themselves before we even get there. And from a lending perspective, it's so helpful. So understanding the purchase process and understanding that it's a two-way road. We got to work together every step of the way. I think that helps immensely.
Yeah. So what are some of those key questions that whether the agent asks or you ask, what are those primary things aside from employment, like Christian brought up, that you would want to know just to confirm or verify that they're in a good position to buy property?
Are you a W-2 employee? I mean, I think that's like first, like out of the gate, that's the fast and easy. Because if you're a W-2 employee, okay, well, are you hourly? Do you work a pretty steady shift? Stuff like that. One big aspect that I think agents need to know is if somebody is a job hopper or if their wages fluctuate a lot, it can be a lot more challenging for a loan officer to try to determine their income because we're looking for predictability. If their behavior has been 5 jobs in the last 2 years, and they'll work anywhere from 30 to 40 hours a week, how are we supposed to predict their income? I mean, they haven't been on a job long enough to have a history. And so things like that are the questions beyond the W-2. But if they're self-employed, that's where we dig in deeper. But I think that, are you a W-2 employee or not? Are you working steady shifts? Are you salary, hourly? Just understanding that stability piece is probably one of the biggest pain points for a loan officer, where you just get surprised. The loan officer is asking the borrower and they say, I make this much. And then you're looking at the verification of employment and it couldn't be more wrong.
So income, job stability, what other things?
Well, and I just mentioned income, but assets. Yeah, sorry, Christian, not to cut you off there, but we said the same thing.
No, you're good.
Assets, not all assets are considered equal. Not all assets are acceptable. So let's identify what is that asset. If it's coming from a 401k or an IRA, something like that, well, we need to verify the terms of withdrawal.
Yeah.
So if it's cash, if it's mattress money, I mean, these are different things. If you're selling I had one guy selling a tractor in New Mexico of all things, but it's okay to do. We just have to get the bill of sale. There's extra steps along the way. So verifying those assets.
And anything else? What other things would be like the key things? So income, stability of that job, assets, meaning I'm assuming when you say assets, it's really about their ability to do the down payment, whatever that may be, and the closing costs. Does that sound right? Yeah.
Yes.
Yeah.
Anything else?
And I think credit, I mean, if credit, it's not there, where you need it to be, and you're working on doing a rapid rescoring option or, doing it for getting a better rate or to qualify for that no down payment program, I think that's still the key, is knowing how soon that's going to increase, And if you're giving that pre-qual letter out beforehand, before that FICO goes up, and then realizing, the expectation again on how soon and how quickly you need certain documentation to bump up your scores.
Is there a good source for buyers or agents even to find credit, or at least an idea of someone's credit? Or is it just something that they got to have done with, meeting one of you and getting their credit pulled?
To confirm things, with us,
Yeah.
Yeah, I think the most surefire way is for sure to just apply.
What if they have no idea what their credit is, but they want to at least have an idea and sense that maybe it's not quite there? They've never bought before. Let's say they're a first-time buyer, and I just don't know. I pay my bills on time. They kind of have a sense of what they do. Maybe they do have a Credit Karma score. How do they really understand if they can buy or not? Like you said, credit's really important. Do they just apply and then you pull it, or what's another source maybe they could go to, or should they just meet with you first?
Well, I'll just talk about the elephant in the room, Mike, which is, do we let someone run their credit or not? I mean, that's really what we're talking about. As a lender, let me be clear. We want to run credit. Absolutely. And as a real estate agent, you want your client's credit ran, not just for credit scores, though. It shows the liabilities. It shows any judgments against them. So that helps me calculate their debt to income ratio. So now in terms of pulling credit, there's a misnomer out there that says, look, if you pull credit, it's gonna hurt, it's gonna drag down my credit. So if I pull your credit for a mortgage inquiry, that's not gonna hurt your credit, because the whole purpose of credit is you've got credit bureaus out there who compile all this data for the sole purpose that they can show a third party, a lender, that your ability to repay a debt is very good. That's the whole reason why they have that data. So if I pull it for a mortgage inquiry, that's not going to drop their credit scores. Even if they have another mortgage lender pull it, it's not going to drop their credit scores. If they have a third one pull it, it's not going to drop their credit scores. Here's why: because it's a mortgage inquiry. Now, if that same individual gets their credit pulled 3 different times for a mortgage inquiry, then gets a car credit inquiry, then a credit card, then a personal loan, then something else. Those are all different types of credit inquiries. That's what's going to drive that credit score down, because what it shows the credit bureaus is you're about to take on a whole lot of new debt, which in turn, it does what? Rhetorical question. It's going to drive their debts up. So now their debt to income ratio is going to go up. Therefore, their ability to repay is going to be harder. And that's really, just to make this really simple, what we have to look at is the ability to repay. It's a rule, the ATR rule, ability to repay rule. Part of that is I have to verify your credit. Credit scores, sure, they matter, but your debt to income is far more important. Verifying you have the assets or apply for a grant or down payment assistance, those are the big things. Credit scores, if they're down low, look, you can always work on those. You can get those up. It just takes a little bit of time. Sometimes it does take money as well, but that's something you can work on. Whereas debt to income, if you're maxed out on your debt to income and you can't qualify for a loan, you're not going to get approved. Now, to go back to that pulling the credit, that's one of the biggest reasons why we need to look at the credit, is because it shows us all those debts. It shows us that your debt to income ratio is going to be in line and that you will meet that ATR rule.
Thank you so much, the three of you, for joining us for this discussion really about how to get the agent excited to work with their buyer, and their buyer to get excited to work with the three of you all together, the buyer, the agent, and the lender, about consulting them towards that idea of how to buy and what they need to do to get ready. Because I honestly believe there's a lot more people out there that are not only qualified to buy and anxious to do it and in a good position to do it, but keep holding back just because they don't know, or others that want to get ready but don't know how. And the three of you, of course, are going to be in a great position to help support that, and the agent can facilitate the whole discussion. So thank you for joining us for this discussion. And I'm really hoping that whoever's watching this, that you understand that when someone says, I want to buy, but I'm not sure I can, maybe one of the first things you could say is, well, let's sit down and talk about it. And maybe I'll get my lender involved as well. And let's see if we can get you ready to buy.